So today we're going to be talking about algorithmic indicators, and they have a lot of advantages. They strip the emotions out of trading, and it actually helps you to make better decisions. But the interesting thing is that it spots micro patterns that you might not have seen before if you were just looking at the naked price data. And another cool thing is that it can actually print entry points without having to do anything. You just have to look at it. And the reason why I like algorithmic indicators is because it will literally just print the entry point, and then you can just walk away and enjoy your day, and you don't have to be like obsessively monitoring it. It's extremely simple, pretty reliable, and it's the reason why I've been able to make consistent profits as a trader. Now, what I'm about to show you are some of the components within my personal algorithm that I developed with different hedge funds. And let me tell you this, if you think that you can compete with Wall Street, literal quant firms that are using algorithms like this, unfortunately, you're sadly mistaken. But the trading algorithm that I'm about to show you today is so simple that literally a beginner can't even mess this up. And then I'm gonna show you some examples that you can use in your next trading session. So do your boy a favor, smash that like button. I appreciate the love, and let's go ahead and just dive right into it. So first things first, we have right here the Dow Jones on my chart. And a lot of the time when new traders will look at something like this, they're gonna get what's called analysis paralysis. They see this and they're like, uh-oh, what the heck am I even looking at? And it's really difficult to make sense of what is actually going on. Now, if we boil this down into three main components, what we can see here is that every single algorithm is going to depict a certain thing and component of the market. Now, the first thing that we want to depict, and this is so important, is the trend. Okay, the trend is your friend. We want to depict what's called the regime. Now, this is what the Wall Street banks and quants, they don't really want you to know this, but in every major trading strategy, there's something called a regime, which is essentially how the market is behaving. Now, the market is classified into three different regimes, which I've learned from working in hedge funds, and it's bullish, bearish, and chop. Now, if you're new to trading, let me tell you this, bullish and bearish, lots of money to be made there. I'll take bullish and bearish any day, but it's the chop where people really have the hardest time trading. Now, this indicator right here, this algorithmic indicator, is something that I've actually designed in order to help me classify the regime. Because the thing is if you can get your bias right, then you can do really well with trading as long as you know what direction the stock or whatever it is, equity is that is you're trading, where it's going. So what I typically would like to do is add in an indicator, and you can see these are some of the indicators that I've created. But what I would do is do a moving average, okay? And this is one of the components within my algorithm. Now, a moving average, right, by itself is really not going to do much. You can do an exponential, you can do a simple moving average, but for this case, I'm gonna do an exponential, and boom, it's added into the chart. Now, with this in itself, it's not really gonna tell you much, right? Okay, I have this line that's kind of acting like it's in the price, but I don't know what's going on. Here's how you use it. There's a lot of people will say, watch for bounces off the moving average or watch for price to go a certain amount away from the moving average. And yes, that's all valid, but this right here is what I will do. I will look at the moving average on a 4-hour time frame. And I do this for every single stock that I look at, every equity that I look at in order to find the trend and regime. I look at the 4-hour time frame. Yes, I will look at the daily time frame, but I also am very much, focused on this 4-hour time frame right here. You can see that 4-hour time frame. Now for this EMA, I will typically use a 30 or a 50-day moving average. So just for the sake of this, we're gonna do a 50-day moving average. Now a 50-day moving average is gonna be for something that moves maybe a little bit slower. So for example, I'm looking at the Dow Jones right here. A 50-day moving average is fine, but something that's a little bit more high beta in the sense that, okay, what is high beta? Beta is like a Palantir, right? Or a Tesla, or something that moves a lot more than just the general broader index. So for this case, I'm going to use a 50 length, and for this style, I'm going to go ahead and make this, red, whatever, or we can just make it blue, so that way it's easy to see. Now notice right here, there's something about this that has now changed. Yes, it's in the middle of the price, but what I can see here is that there's actually an angle. And what this angle is going to tell me is if it's pointing upward, then I'm in an uptrend. And if it's pointing downward, then that's the start of a downtrend. And sometimes what you can do here, this is not a bad idea, is you can actually map out where your buy trends would be with this rectangle, right? And if I can go ahead and make this green, then I'm gonna notice from right here that, okay, this is obviously very clearly, we can see, going to be an instance for buy trend. So look at this, right? If I go ahead and just replay this, we can see right here. So if I actually go in and replay this, what I can see right here is that this, right, was the only instance to where the moving average was actually pointing upward for a short duration. So it was pointing upward here for a short duration, and then it came all the way down. And this was actually the break of trend, right? When it came up, and then it just went down, right? And it broke through this. And it's just pointing down this entire way. However, once it finally starts pointing upward on the 4-hour time frame, we can see that now, okay, if I let it run and let this play, we can see that now it actually starts to go up. You can see right here, right? And it treats this as almost like a flip in the trend. And this is a huge help for finding a bias, whether it's the NASDAQ, the US 30, or whatever. I use this for pretty much every single trading strategy that I have, is just classifying that trend and finding the regime. You never want to be on the wrong side of the trade. So now that I've gone in and classified the trend, what I'm going to have to do now is shrink this down on a smaller scale. Now, why would you do that? If you're already looking at it on the 4-hour time frame, why would you look at it on a smaller time frame? Well, that's where the actual trading opportunities lie. And that's where we can see the actual price come into a point to where it's either overbought or oversold. Now, let me tell you this, if we're in a nice big uptrend like we just, essentially identified right here, what's the goal within that uptrend? Well, the goal within this uptrend is going to be finding opportunities to buy. And if we can find opportunities to buy essentially in this entire area, and then we can go ahead and see so if I map this out to be my area of interest, then what I can go ahead and do here, let's say if I'm backtesting, is really dive deep in this area to understand that, okay, within this point right here, I want to be taking these trades intraday, right? A lot of prop firms, a lot of day trading strategies, etc. You're going to be in and out ideally within that one day. Now, I'm not here to say that that's a bad strategy. I'm not here to say that that's also the only strategy, but it's a strategy if you're doing something intraday. Now, general rule of thumb, what I would do is use this 4-hour time frame for the week, right? To get a really good sense of how things are moving over the last couple of weeks, this week, all the way up to maybe around a month. But in order to get a good sense on how this is moving in the day, I want to shrink this down to a 15-minute time frame. And if I can shift it to a 15-minute time frame, now I have a lot more data to work with, right? We can see I have all this price data going all the way back. Now, here's the caveat. How do I find opportunities within this price data? So what I'm going to go ahead and do is take out the moving average that we had because it's no longer applicable on the 15-minute time frame. We don't need it anymore. But what I can do now is actually use my RSI. Now this is my quant farming RSI regression. I built this. It's utilized in a lot of my different algorithms. But I'm going to go ahead and just walk you guys through it. Now I personally like this RSI regression better than just using a standard relative strength RSI. I personally love the RSI. I think the RSI is great. A lot of people hate on it. Oh, it doesn't work. Well, that's because you don't know how to use it. Anyways, the RSI, if you know how to use it, can be a very powerful tool. And from here, right, what I will go ahead and do is just clean up my relative strength, and we can see, right, if I take out some of these lines, then we can see here's my relative strength RSI regression. Now, what I want to go ahead and do is just show you guys right now, if I just have a regular RSI or like relative strength index, what is the key difference between these two? Okay, this is the one that you can just go in and put on to your, trading view chart, but this is the different one. Now, the difference is that this right here is a regression, and it's a linear regression that has an upper and lower band. And instead of that traditional 30 and 70, right? Because traditionally, an RSI will say anything below this value right there of 30 is going to be oversold. and anything above this 70 line is going to be overbought. But in a trend, I've found that that actually isn't always true. What I've found is that if we're in a nice uptrend, I want to be as hands-on, as heavy buying as I possibly can, because the odds are stacked in my favor if I'm in an uptrend and I'm buying, and vice versa for the downtrend. So what essentially this does is it depicts where that overbought and oversold level really is with this essentially this band right here. So we can see, right, we have a couple of these different points that I can highlight. So for example, we have this point right here to where it said market was oversold, this point right here as well, and then we have this point, and then we have these two main points right there. However, with the original relative strength, we don't really fully know, right? There's this point, and then there's also this point, and then that point, that point. It's just a little bit more, I would say, discretionary, if that makes sense. It means you have to use your own judgment more for the relative strength without the regression. Anyways, so we're going to go ahead and scratch this one because I personally like mine better, and I think it just gives me a more accuracy from what I've seen. And as a trader, accuracy, every little piece of accuracy I can get is, I'll take it. So if I go ahead and just actually look at these points to where, okay, we had the oversold area. If I'm in an uptrend and it's oversold, clearly that's an opportunity for me to buy. Now, if I just go in and plot these without even looking at anything else, and this is going to bring us to the third and final indicator, which is the most important, then I can go ahead and just plot these, right? Boom, right there. And then we have one right here. Okay, I would say about right there. And then we have one right here. And then we have another one right here even, I would say within this area. We'll just go ahead and put it like right here. And then for one more, I believe, actually, no, we have this one right here. And then one final one we'll place right here. So we have a couple of different data points to work with now, and if we go ahead and highlight these, then we can zoom in even more and start to get a pretty good grasp on what we're looking for. So if I can see that for this example, the relative strength was officially oversold at this point right here, okay? And I'll go ahead and place an arrow on the screen. So if we were officially oversold right here, okay, then interestingly enough, okay, so we were officially oversold at this point right here. Now, the problem here is this, right? If I were to just go ahead and buy at this level, right, what would happen? Obviously, right, the price would go down. I'd probably hit my stop loss. The number one problem here is that I didn't wait for confirmation, okay? And that's another reason why I really like this relative strength, is because just because, right, you came down and you crossed below that oversold point doesn't mean you just want to instantly buy. You want to wait for what's called a reversal. Third and final indicator is what's called the KRE. Now, the KRE is short for the kernel regression, and the kernel regression, in my opinion, is one of the strongest and best indicators that you can use for finding confirmation. So let's go ahead and zoom in a little bit right here. And if we can see that the kernel regression, okay, does an interesting job at filtering this out. Now let me see. It looks like right here, the kernel regression flipped over to green. So another thing too, right, is you want to make sure that you optimize your input settings. So the KRE is not really something that you can just go in and type in on your indicators, right? That's not something that you can do, unfortunately. However, what you can do, right, is use something very similar. So let's say I optimize a little bit more. I like this a little bit better, that 110 in one. And so that way, right, instead of going in and maybe getting faked out right here, I can actually get in right there, right? And if I were to get in right here, maybe suffer a little bit of drawdown, hopefully don't get stopped out of my position, but right here is going to be this optimal time to enter, right? And if I can survive this, right, which ideally you should, considering the fact that if I have my take profit, right, at the previous session right here, then ideally if I'm getting in right here and I'm trading for about a 1-to-1 risk to reward, then my stop loss should realistically be, around here, I would say, back in this other midpoint. So that's about a 1-to-1 risk to reward, give or take. You come in here and it comes and smacks it. Boom. I'm happy with this trade. This is something that I'm looking for, right? Now, if I do this enough times, I can go in and I can start to see, right? Let's say even if I want to do more of a live example, right? And I also don't want to use the KRE as well, right? So we'll take the KRE off. We'll go ahead, turn it into replay mode. And we'll say right here, this was our opportunity. Now, another thing that I can do, right, is just go back to this moving average, okay? And if I take this moving average and I change it to, let's say, a 30, then one thing that I can do, right, I think 30 is a little bit, here's what we need to do. So another thing that I can do in order to find really good instances of confirmation is just use a moving average and actually look at that moving average angle on a smaller time frame, right? Instead of looking at the moving average angle on the 4-hour, I can use it for confirmation on the 15-minute. So if I go ahead and I'll slow this down real quick and just let this run, okay, we can start to see that right there, right, on this big candle, say about right here, this was when the moving average started to point upward. So if we were to enter in anywhere on this candle, then we would see, right, we come in and we clearly hit the take profit. If we were patient, okay, key is patience, we clearly hit a take profit, right? Even if we were all the way back up here, this would be excellent. So let me go ahead and pause this. Now here's the deal, okay, here's the deal. That right there was a pretty good entry point, don't get me wrong. But was it the optimal entry point from the KRE? Well, actually, the KRE would have gotten in at the close of the open of this candle. Can you see how this is a big difference right here? Okay, this is, as a trader, make or break. This is a difference of like 40, 50 points. Okay, so right here, okay, on the close of this closes pointing higher. So we're able to get in somewhere around here. But if you were even able to look at the right side of the screen, right over here, if you were even able to see that this closes and at the open of this candle, so at the open, the very, very bottom point, that KRE turned green, you could have entered into this candlestick, and instead of waiting for this to go all the way up, because you'd have to wait all the way to here, you could have saved yourself around 50 points, okay? So this KRE is a little bit quicker. It's a little bit quicker to respond. In my opinion, I like it a little bit better, and it does a little bit more volume filtering as far as the indicators and the confirmation goes. It's faster, so speed in trading is key. Now, from there, you can see this is another good trade, and we can go on and keep doing this over and over and over again, but that is the framework for the actual trade itself. So what I'm actually going to show you guys is more of this all combined together in an algorithmic strategy. Now, before I go in and execute and show you this algorithmic strategy and actually show you the AI as well, go ahead and drop a subscribe, because I'm going to be launching a 2 to 3 hour video, just way more in depth, that goes over literally everything. It's going to be a full A to Z guide on trading, my framework, and everything. So go ahead and make sure you subscribe. But anyways, let's get back into this. So what I'm about to show you right now is something that I developed while I was actually working at the hedge fund. And since working at the hedge fund, I've refined it and it's gotten better. And it's very powerful. So let me go ahead and clear my chart. And what I'm actually showing you right now is everything combined. So this is actually the moving average angle, you can see. And the cool thing about this moving average angle is that this is the 4-hour moving average, like I showed you in the beginning of the video. However, it's on a 15-minute time frame. So it doesn't matter if I even go on a 1 minute time frame, I could still see this 4-hour moving average, and it's going to paint the entire back of the screen green. So I know that, okay, the trend is upward. I want to stick to only making buys from here. Now, another thing is that every single time the relative strength is going to go below our level, then we're going to go ahead and get an indication from the actual algorithm once that KRE is also pointing green that we're getting a long signal. Now this actually gives us some really solid alpha signals right here. We can see we had a really nice trade right here, a good trade right there. This one, right, you can't win them all. And then we had another good trade right here, right? And as long as we're in that nice trend, then we can see some really good trades. Now, another thing is this, is it's actually plotting out for me based on the range, where my take profit and stop losses are. And another cool thing is that it's actually plotting my stop loss and take profit out for me based on the range. So you can see that this right here, I'm going to have a bigger and wider take profit versus right here, it's going to be a little bit smaller because there's not as much volume and activity. But this is automatically doing that for me. So that's another huge pro from this algorithm. Now, another super cool feature is that we actually built our own quant farming AI based on that algorithm that I just showed you. So when we get the signal from the AI, we can actually go in and almost do what's called a double check and see based on the AI what the probabilities are. So we have the probabilities below, and we also have this for NASDAQ as well. So we can see the NASDAQ is actually trading an ORB, opening range breakout strategy. Now, the cool thing here is that we have this like double strategy from US 30 and on the AI, because we can see that it's also placing trades for us, right? It's pretty much the same exact concept. But when we get a trade from the actual original algorithm that has no AI, we can use the AI to do what's called like a double check and have that be almost like an indicator within itself. So let's say you've seen this and you want to start practicing. Now, I use this analogy a lot, and you don't want to jump headfirst into a kiddie pool. And what I mean by that is you don't want to just throw a bunch of money at this right away without actually building the experience first. You want to slowly dip your toes in and get into the pool. Now, what you're going to find is that, hey, the pool is nice and warm. But the thing is we have to do this safely. And the way we can do that is by doing what's called paper trading. Now, paper trading is super easy. It's one of the easiest things ever. All you do is you come in here and you click one of these buttons and you click buy, paper trading, and then you can click these buttons. If I go ahead and click buy, then from here, it looks complicated, but very simply go in and map out some of these positions that I want to make. So if I want to go ahead, and every time I'm typically going to do what's called a market order. That means it's executed right when I click that button. But what I can go ahead and do is set the exit points as well. So for example, right, let's say I want to go ahead and place a trade right now, right? Let's say I think that, okay, whatever, confluences or relative strength is looking really good. I can go ahead and put, let's say, my take profit right there and my stop loss right there, right? This is just a hypothetical, so that way I can show you guys how to do this. Now, what I can go ahead and do from here is see that this value, right, 50527, that's going to be my stop loss, okay? That's just what I've identified and maybe what the algo has identified for me to take my exit. So I'll do 50527, okay? And then for my take profit, I'll do the exact same thing, and I'll go ahead and type in 5119. So 511, oops. Make sure you don't mess any of those things up. So 5119. Boom, done. You can see the ticks right here as well. So another thing that I want to make sure that I can just go ahead and do is change this. Instead of units, I want to do percent risk, percent balance. Guys, this is the most important thing, one of the most important things about trading, and if not the most important thing about execution that I can tell you. Number one, obviously, discipline, consistency. That is what builds long-term success. But discipline and consistency come in from having a scientific method when you're trading. You want to be risking ideally close to the same amount of risk per trade. If you have an A+ setup, you want to throw a little bit more on the table. That's understandable. But it's the traders that go in and risk way too much, or way too little after they lose are the ones that never see consistency. Well, how could you? You're risking based off of how you feel. As soon as you change that, you're going to start to see some success. And it's going to be hard, trust me. It will be hard seeing that perfect setup and going in with only 1% risk and doing that over and over and over again, or doing a predefined risk percentage. But if you have that predefined risk percentage going into each trade and you can actually map it out and stick to your plan, that's when it starts to make sense. So here, what I can go ahead and do is change this right here to risk percentage balance. If I go in and change this to 1%, it's done. It's 1%, and I know that my take profit, my stop loss are already done, and it will automatically map out the number of volume or the position size for me. I can go ahead and click buy. Boom, it's done. You can see right there, that will be 1% of the account. Now let's say I want to close it before it hits the take profit, which in all honesty, you probably should wait for it to hit the take profit. But let's say, some kind of news announcement came out, whatever. You can go ahead and just click close position and you're closed. Now that right there, that process of repeating and practicing on the paper trading and going ahead and actually everything that you saw right here, you can use and you can paper trade, you can do this all for free. That is what's going to build consistency. All right, gents, that is A to Z how to trade with my trading algorithm. If you're watching this in the future, make sure to check this video for that link to the entire free course video. And if you enjoyed watching, go ahead and drop a comment. I'll get back to you guys as soon as possible. God bless you guys. Thanks for watching.